looking really fucking bullish, I think, overall. Exchange reported short interest went up by 1.3%. This is data from about October 26th, report on the exchange. So you can see that we're continuously stair-stepping our way up. Estimated short interest of the free float percentage is up almost 3% as well. So this is all super bullish information for AMC October 26th. Excuse me one second. So you can see that we're continuously stair-stepping another video in the background. Estimated short interest of the free float percentage is up almost 3% as well. Much better. Gamestop and AMC options probability calculator are looking pretty fucking bullish. Well, let's switch over to the Gamestop information so you can see their short interest as well. What's up, guys? You still with me? Earnings per share change for GameStop is up 131%, by the way. 131% increase. Let's go to the advanced data for it also. What's going on, guys? Thanks for coming out. Brad, Kersha, Kevin, Aaron, it's good to see you guys. Arthur, welcome back, my friend. It's good to see everybody. Yo, it's good to see you guys. It's Marcel Kalinovic, Boss Blunts. We got some Vortex data up here for AMC and GameStop over the last several months. It looks like the GameStop reported data is actually down slightly, but the percentage short interest of the free float is up by 3%. AMC is kind of the opposite story. The exchange reported short interest is up. Taking a look at the GME options probability calculator from Fidelity. This thing is showing for November 3rd a 99.38% probability of being above 206.99, which was the price, the closing price before the after hours madness that we had. Let's take a look at AMC for you guys too. This is using the 30-day volatility. Fucking rock. Oh, tell me I'm not logged in anymore. I'm gonna have to log that back in. No problem though. Just got to get that off screen. While I'm doing that, you guys can check out all of the ETFs that are currently holding AMC. So all these ETFs that you see right here, like IWM, etc., hold AMC. All of these ETFs that you see right here are being held, or excuse me, hold both GameStop and AMC. And then all of these yellow ones up here are ETFs that are holding GameStop. So there are a shitload. That's the only way I could explain it. There's a lot. You could say there's many of them. There's a growing number of them. There's many different ways that you could spell it out. But plain and simple, when these are manipulated, then the underlying assets, such as AMC and GameStop, are also manipulated. It's a very simple concept. See what's going on in the chat. Appreciate y'all. Check this out. This is from Kenna over at the Bull House. Make sure you drop the Bull House a like. They give out some fantastic information. A lot of it is broad market, stock market related. It's fantastic educational information. They had an awesome stream yesterday with Kringle Kitten, with I believe Unusual Whales, and some other people. So check out the Bull House on YouTube and on Twitter. My man Darren Harper on Twitter came up with some really good info. Check it out, guys. Check it out, Elmo Silverback. What do you think of this? This guy's been adding up. He's been adding up all of the the ETFs and their purchases and sales of AMC. I think this is super fucking bullish because you can see that the volume on it is increasing steadily. What's up, man? Stonko Tracker is currently saying we have... Yeah, exactly. But go ahead and explain it if you want, Elmo. You know, Stonko Tracker showing 0 shares available. Thanks, Michael, for pointing that out, man. That's a great point.
Yep. So, you know, like you said, I mean, it's what that actually shows is it just works. It's showing that they are working harder to suppress the volume and the price for the stock for AMC and GME. That's all that's showing for the ETF chart.
If you want to look at the on-loan average age of GameStop is at 54.2 days as of November 1st. That's the most recently reported date. You know, just back in August, that on-loan average age was in the low 30s. It was as low as 31.84. So as of now, this average age that they've been holding on to these GameStop shares and shorts is 54.2. That's a beautiful piece of information. And get it, it's only 85% of the reported information because the other 15% is not reported. And a lot of that 15% is traded on dark pools as well, which they allow the more shares to be traded at rates that aren't reflected on the stock market price as much. So it is price suppression.
And at 54 days of average, I'd be interested in seeing what their
for
average
GameStop,
share cost is.
And then 70, is it 74 days now? But anyway, yeah, the free float on loan for AMC here is showing up as 21% almost. These are pretty good numbers. And again, this doesn't include any of those ETFs. It doesn't include anything overseas, no depository receipts, no ISDA contracts, no futures or total equity return swaps. Noah, Rennie, Brad, Anthony, thanks so much for coming out, you guys. Monty, I appreciate your support. Yeah, BBY had a beautiful run today. Man, we were fucking pumped about that, huh? It was nice to see that happening for all these meme stocks. Would you say, Silverback, there were 6 different ones that were having a beautiful day? Oh, sorry, Silverback's getting quiet on me.
Do you remember which ones they were?
Yeah, there's no, it's I didn't realize I had my mic off. They had Bed Bath and Beyond, BlackBerry, AMC, GME, and 2 others, and their charts were really similar. They were as close as you could get without, you know, basically copying them.
Cost and Naked were the other 2.
Oh, yep.
Awesome. As you can see, that these are the daily movement of AMC shares in ETFs. Okay, and these are the buys. These are the sells for the week. This is the week of October 11th through 15th, October 18th through 22nd, 25th through 29th, November 1st, and starting the information for November 2nd because we're going to have that likely tomorrow from my man Darren Harper over on Twitter. Make sure you guys follow him at Darren Harper, DARIN, HARPER. So that being said, thank you very much, brother, for sending this over to me. I really appreciate it. It's fantastic information to share with people, and a lot of you might look at it and just be like, oh, well, it's just numbers. It doesn't look like anything in particular. But check out the volume on this. Each week is increasing. All right, it's steadily increasing from the start. Check out their lows and their highs. So the daily AMC ETF movement is increasing by each week. Now to the point where on November 1st, we had 24 million shares of AMC traded in buys and sells, and 26 million in sells. Sorry, I said that backwards. 24 million sells in the ETFs from AMC, 26 million buys in ETFs from AMC. Whereas all of last week, there was only 96.2 total. So that's really fucking bullish. This is a long call calculator from Options Finder, Options Profit Calculator. A January 21st, 2022 $145 call is currently going for around $149. If you pick up 10 of them for $14.90, $1,490, and the stock price increases between 54 to 324, you could be seeing some serious gains. Serious gains. That's, be careful because you can lose all your fucking money on them. All your fucking money.
Yeah, 74 days ago, for AMC, 74 days ago, the average cost was around $32.
Yeah, and again, I'm not a financial advisor, and this is not financial advice. And you need to be aware that if you decide to do anything like trade options, you're potentially putting every single dollar, if you're putting up calls, to lose, because if that expires worthless, it's not going to make a fucking difference how much money you put into it, because you're going to get nothing out of it. And even worse, if you take out puts or a short position and that shit goes the opposite way, you're fucked an unlimited amount almost. Well, at least the entire amount of your put, unless you're trading on margin. And if you're shorting a stock, then you have unlimited losses just like the rest of the fucking hedgies. So that's definitely not something that I would consider as a trading option. A lot of people feel that swing trading or day trading, calls and puts is easy shit or is not dangerous, but they need to reevaluate. They need to do more research on it, learn the Greeks, understand what everything is, realize how bad you're going to get fucked by theta decay when you least expect it. Or you need to make sure you give yourself more than enough time to get in and out of a position if you need to. So options and calls are absolutely a way to make or lose a shitload of money. The potential profits are exponentially unlimited almost. If you take out these calls, these contracts, we have one contract here. For January 21st, $900 call. This is the current stock price at GME, 207.42. And if it ranged between $250 to $1,000, anytime between November through January 21st, the expiration date, you're going to make some serious dough. But if it stays in this bottom range, in this bottom, you're going to lose a shitload of money. Okay? This is the value, the profits on it. Okay? So you're definitely going to be in the red for a long time if you ever even see green. That's the way that a lot of options work. I am down a lot of money on options currently that are unrealized. And for me, that's fine because I can live with that risk. I am well aware and understand that this could work out negatively for me or that it could work out very positively for me. And I'm willing to lose every dollar that I have, every penny that I have invested in these calls. So people need to understand that. So if you take out a $950 call and that son of a bitch, say the debt ceiling cracks or, the government can't agree on this fucking infrastructure bills and we have a MOASS due to a collapsing stock market because assets are garbage. So now Tesla and Facebook stock are worth half their value. Margin calls are going to occur. And now shorts, like we saw today, getting bought back on AMC, Gamestop, BBY, costs, etc., HOS, whatever. Those are going to get bought back to an even more extreme than they were today. Today was nothing. Today was just some nice algorithmic trading. But if this thing does fucking run to, say, $650 by December 20th, that call, that's $200 and something right now, would pay out $5,690, a 2,163% gain. That is based on you have a 0% probability of profit. It is estimated returns. So you have to be aware that this thing is only so good. Like, this is not a perfect calculator. It's just giving you, calculating what these theta and your delta and your gamma is going to do, all these Greeks are going to do to the option itself to give you these numbers. But these are real possibilities if things run a certain percent. And we saw with something like, for example, let's go to AMC, get that price, check out the buys. Let's go with February 18th. And we've got calls right now, they're going for 475. You know, so say I take out 5 of them. So that calculates a total cost of $2,375. All right, I'm estimating a price of $45 through $300 as output options. And as we saw back in January, let me turn this back on so I can talk to you. Excuse me. As you saw back in January and in June when we had these massive run-ups, there was a really huge amount of IV change. Okay, so the implied volatility of these options went through the roof. It was almost at 600% at one point in AMC, and it was up there in the 500s for Gamestop as well. So if we have an IV increase, a steady IV increase, you know, it's going to increase your gains even more so. If we get, let's say the stocks get lucky and AMC happens to run up to 144 through delta hedging and gamma squeezing and FOMO buying by December 17th, that's a profit of 2,571% on your options, which would be 61,065. And at the same time, it could run out further. Say this takes out through February, and by February 15th, you're at $72 strike price for AMC. This call would have gone up 359%, $8,520 value out of a $2,375 investment. But again, if that stays out of the money, or if the stock doesn't go up into these higher prices, you're going to make less or potentially lose it all. And keep in mind, my stock price range here starts at 45. So you got to look below as well in case things dip back down into the 30s, because you never really know. In my opinion, I think we are going to be super fucking bullish for November 3rd. And AMC and GameStop are both going to be significant double-digit runs, 10 to 20% a piece at least. I think we're going to see some halts tomorrow. Don't quote me on that. Fuck it. Quote me on it if you want, but I think we're going to see some halts tomorrow. Kind of scared to say it because it's going to be fun shit. And I'm looking forward to it. I kind of can't sleep at night thinking about it before these things occur. And this is one of those nights for me.
That's why I'm a half a bottle of vodka into it.
We've got some upcoming catalysts throughout the month of November too. I'll go through them at the end of the video before we get off.
Yeah.
Absolutely. Aaron says, I had over 3,000% gains in June with my $40 calls. I would love a repeat because I lost all my gains on expired calls last month. And that's the dangers in calls. You know, that you could very, very well do that. You've seen people put these fucking YOLO plays on super stocks and all these other Reddit threads. And you mostly see the good ones. Let me tell you that much. Not many people post their massive losses. And the ones you do are epic. And they go down in history. You know? So, I don't know. BBY buyback, I don't know enough about it to share that information right now. If you guys do, I'd be more than happy to hear about it. We can definitely look into that. So I just wanted to run that information on options. Again, I'm not a financial advisor. I have been trading options for a short while. I've been trading on the market for, nearly 15 years. So I do know something about trading. But again, I'm not a financial advisor, and this is not financial advice of any kind. It's just a tool among many that is flawed in many ways, but provides some pretty accurate numbers in estimation. I do remember my $40 calls printing pretty nicely. I was very happy about that as well. Again, one thing that people need to remember, they're not just buying back the short positions on AMC and GameStop. Every time that these ETFs were shorted in order to bring the stock price down of AMC and GameStop by the algorithmic trading and the manual trading that's occurring by these hedge funds and market makers, because the majority of them are using algorithms nowadays, whether you like it or not. And it's legal. It's legal to use an algorithm. However, they put themselves in a position, when you take into account all these ETFs, all the totals, the total return swaps, the collateralized debt obligations, I already said that, the depository receipts, Brazilian depository receipts, they have them in Germany as well. So there's many different avenues. Then they've got these joint ETFs, which hold AMC and GameStop and a lot of other things as well. But these are just some recent ones that Kenna from the Bull House was kind enough to put together for us. So for herself and for everybody, it's wonderful. I'll share the link to the mind map on it in the chat for you guys also, because she's done a great job on it. So yeah, I'm super fucking bullish. The volume on these ETFs has gone up steadily, from the starts between 30 to 40, and then the next week 41 to 50, and then the following week, October 25th through 29th, 49 to 57. And now the volume ETF start at the start of the day, the movement is 46.4 million on November 1st, 48.3 million on the 2nd. Notice the upward trend. I know you're saying that this number is lower than these here, but I believe this is the lowest number of the week. That I believe that Wednesday, Thursday, and Friday of this week are going to have the strongest actual volume in these ETFs and in the stocks themselves, due to buying back and due to the manipulation that occurs by the algorithm through further shorting to keep the price within check as much as possible. They have to keep the price at a certain level at all times so that it has the maximum psychological effect on the retail trader and the best outlook on their books at the end of the day. So that being said, let's see if we can pull up the AMC probability calculator. I think we sure as fuck can. Why not? Cheers, everybody. We're going to be fucking rich. Holy shit. I can't even think of a better way to fucking say it, right? Plain and simple. You could say it many ways. I think we're going to be absolutely wealthy. No, that just doesn't have the same effect. I think we're going to have generational wealth. Yeah, that sounds nice. But you may or may not have that. You may have to work towards that if you happen to make a lot of money in life and on the stock market or whatever. But in my opinion, the best way to put it, when I know what I know about this stock and in my analysis and my thesis on their short positions, that when I see the probability calculator from Fidelity saying that the price is going to be 98% probability above 38.79 for AMC and 1.86% probability below AMC for November 3rd. That's fucking bullish. I am fucking pumped. I'm looking forward to market open. I'm almost positive it's going to be up. But who knows? They always like to short shit to try to, shake people off and get, hit some automatic sales, when people have stop limit orders. But I just don't think that they're going to be able to do that too much. I think they're just barely hanging on right now. And I'm sure plenty of people have heard that before. But I'm okay with saying that because this is at a point in the charts where things are getting out of fucking control. Let's take a look at GameStop. Excuse me one second while it pulls it up on the Fidelity calculator.
No, you're good. The volume was relatively low today.
I'm fucking pumped. I'll say that much. I gotta play this goddamn song. That's how fucking pumped I am.
Okay, 3, 2, 1, let's go.
volume for GameStop is really low today. 3 million.
That's how pumped I am, dude. I want my fucking money. I want my goddamn money. Griffin, I want my fucking money. Anyway, sorry. GameStop probability calculator, 94% chance of being above 206.99, 5.9% chance of being below. That's super fucking bullish. That's on the 90-day. Let's take a look at the 30-day and see what the deviation changes to. 98.38% probability of being above 206.99. Hey, this thing's been wrong plenty of times. I can tell you that from experience. But that sounds great. That's just one of many indicators. One of many indicators. And then you've got some great fucking charts here from my main man, Edward Brichik. Thank you very much for coming up with this. Check him out on Twitter at Edward, EDUARD, Edward Brichik. Check out this. He's got a set of Vortex indicators. And what happens here with the Vortex indicator on the positive, which is the blue, and the Vortex indicator on the negative, which is the orange. When the orange line goes higher, it usually means that the stock price, the volume is decreasing and the stock price is going down. And as the blue takes over, this red, this is, you see the blue takes over and intersects it and goes upwards. That is usually an increase in the stock price. As you can see evident here from when the Vortex indicator is deep down and low volume. And then when the dark pool volume dries up, the ETFs are starting to get abused more and more, and the volume on ETFs starts picking up on AMC and GameStop because they need to be manipulated further to keep the stocks under control. But it still causes more bullish action on the price, and the algorithm has to cause this buying back of pressure. So that increases the volume, and the Vortex indicator reflects that. As it starts to compress, if it were to cross back under the orange, that would be a bearish indicator. But if it stays above and kind of deflects off of it, then that is again a more bullish sign here. And here it's turning a little bit more, again, more bearish as it deflects downward further and further, as you can see here in the price action. As it crossed over it multiple times, and it actually bounced off it here and then crossed over it finally here, as you can see. Again, it's retracted several times, and it's like wavelengths. The Vortex indicator is like the amount of volume over time. And that being said, here we're at a point where it's either going to deflect slightly again, which I doubt, or cross over into bullish territory and cause another green run-up. However, this time I think it's going to look a lot more like this, if not even more aggressive, because I think this is what we're seeing right now. And look at that. My man's got some fucking arrows pointing that right there. If you see this, you see you got two retractions here, two retractions on this side, a large change in volume and negative pressure, red sales shorting. Here, lower pressure, dark pool, abuse of payment for order flow and running your odd lot buy orders through the dark pool in massive orders to maintain the stock price low. That is how they maintain the price low on AMC and GameStop, and the volume, because the dark pool volume is not reflected the same as lit exchange volume and sales pressure and buying pressure. So as you can see here, when it crosses over, you see massive green bullish action. And I think what we're seeing right here with these 2 days, I think it's this exact same fucking thing right now that's coming up next. I have a good feeling that this is going to push us. I think it's going to push us into the 48 range here in the next couple of days. But again, I could be wrong. That's just my opinion. We've got a further indicator here. This is the Stochastic Rsi. This blue and orange volume indicator as well. This is heavy buying pressure, heavy selling pressure, and low volume. The RSI, this is oversold, and this would be considered overbought. When it is above 70, that would be considered like a bearish indicator because it means it's the stock price is overpurchased. And then when it's under 30, that would mean that the stock price is oversold and is due for a retracement into positive territory. But again, look at how hard it fought here, and then it continued its upward trend here, and then crossed back down into bearish, and then swept back up. This is what happened right before the January run-up. And you can see some more trading action here. We're seeing the same thing here with this massive underswoop and this dual pattern here on the volume. See that? I'll put it all on the screen at the same time. There you go. I think that's clear as fucking day. This is the exact same volume pattern as this. You don't have to be a genius to figure this shit out. All right? The algorithmic trading and the current positive buying pressure of everything that's coming up, along with the November 8th earnings date for AMC and GameStop and AMC both having fantastic, fundamental, fantastically good increases in their fundamental bottom line. GameStop has no debt. AMC is paying off a lot of its debt and opening new theaters, increasing revenue, getting new channels of revenue. They are both looking into releasing NFTs. I think GameStop's going to release the Wu-Tang album as an NFT somehow, and to shareholders, and it's going to cause, it could potentially cause or add to the mother of all short squeezes. We could see a market collapse, and then Ryan Cohen and could decide to piss on the fuck, throw gasoline on the proverbial fire. Next thing you know, we've got a mother of all short squeezes on top of a fucking market crash that would absolutely obliterate the financial system of the United States and the world. And rightfully so. Rightfully so if they're so goddamn over-leveraged. So take a look at this fucking lower indicator. Here you've got the Stoke. Hang on. Again, this is stochastic indicators, positive and negative movement, bearish and bullish signals. Over the top is oversold and the bottom is overbought. And you also see the blue, the orange and the blue. It's the same thing. It's the positive buying pressure over the negative. See how when it's on its way up, the blue rides above, and when it's on its way down, the blue crosses over and becomes bearish and rides beneath the orange negative indicator. Same thing happens with the Vortex indicator and the rest of them. They're consistent. And now, anything could happen and things could change at a drop of a hat. But as far as charts go, this is about as bullish as I could fucking be. So, I'm digging it, man. If you guys got any questions, let me know. Tomorrow, the Federal Reserve starts tapering. The Federal Reserve starts tapering. You know what that means?
Yeah,
We're going to be fucking rich. We're going to be so goddamn rich.
I think it's time to blow this thing.
Yeah, man.
Get everybody in the stuff together.
We're going to be fucking rich.
The list of catalysts that I have written down and typed up. Tapering gets announced tomorrow. You have the pawn shop regulation on November the 10th that will get enacted. Evergrande and China stock markets are starting to see inflations in the food sector. Currently, they're saying anywhere between 5 and 15% hikes. The housing market is beginning to go down in China. Evergrande trading has been halted, and the upcoming bond payments from multiple companies in the property development sector in China. That's going to be the telltale of everything. And also today, Janet Yellen announced that she's going to be having a meeting with Bank of America executives as well. So possible bailout there, potential bailout, but with the debt ceiling not being raised, her hands are completely tied right now. So that's what I have.
Yeah, and she can't bail out Bank of America. If
No
Bank of America
chance.
happens to go bankrupt, Janet Yellen does not have the money to bail out a bank. Or Goldman Sachs cannot be bailed out. Lehman Brothers could be on our fucking doorstep.
Times 10.
Sorry if I'm on a fucking went on a tangent there, man, but that shit had to be said. You're right, man. You're on fucking so many good points, dude.
Really.
Keep them coming, Elmo. You're the man. Look at this. AMC, 91% probability of being above for tomorrow on the 90-day. And if you switch it over to the 30-day, which is more, in my opinion, more realistic because we're now on a positive uptrend, so we need to look on the 30-day. It's a 98.18% chance probability of being above 38.79. That's pretty bullish. We could slide it up too and see, let's see, 44%, 0.67% probability. Again, this is not a perfect tool. See? You go to 41.36 and it's kind of split. It's 43.56. It doesn't know what's going to happen next, even though in after hours and pre-market, we're in the 40-41 range right now. Get the goddamn money printer out. Holy shit. I am going to be streaming tomorrow, in case you're wondering. I think tomorrow's going to be an important day. I think we're going to see a bigger green candle tomorrow.
For sure. Back, you got anything? I know you talked about, I should give everybody an update on Kenny G's travel agenda.
Fuck yeah.
You all right?
Where the hell's Kenny been? Where the fuck is
So
he?
he,
Get on his ass.
I think like on the 28th, he did a trip out. Well, actually, no, prior to that. So he would spend about 4 days out in New York. I'm sure it was at his office in Manhattan. Spent about 4 days there, and then all of a sudden picked up and went straight to LA. Did a turn and burn same day, went from LA back to Chicago. And 2 days later, he did a flight down to Miami area. Yep.
You think
down
this is
to
all
Miami,
business
did a
related?
turn
Why is he
and
got?
burn.
Why is he going to every office? I don't think he's going to every office.
Well, I mean, it happens to be the same city as every office.
Because he's got a house
Whether
there.
he's going there,
And
yeah, he
people,
does.
connections.
He doesn't in LA though.
Connections.
But you know, but yeah, connections.
Oh, yeah.
Crypto hard wallet.
Maybe
You know,
he just likes the beach.
yeah, not for a turn and burn. He wasn't there for. It was a real fast flight. So he's doing sneaky Kenny shit as usual. So
That's
to
great.
me, I think he's circling the wagons because he knows at some point he's probably going to get indicted. At the very least, he's going to be probably subpoenaed. So what's your out on that? You get all your ducks in a row and be able to get the hell out of the country as soon as possible. And I think that's pretty much what he's doing. Maybe he's meeting with attorneys. I don't know. All I know is he's sneaky Kenny doing sneaky Kenny shit.
Sneaky fucking Kenny.
Yep.
Someone's got to know what he's up to. Someone's got to cross-reference that. Cross-reference the time that he arrived in LA to see if any large crypto exchanges happened.
Yeah, I can get that the dates and times he was there pretty quick.
Like we were discussing earlier, looking at the 13Fs and the actual ETF shares listed, they're all noted in millions, so these buys and sells that are going on, a lot of the selling pressure is happening in the pre-market, and then they're buying back the rest of the day, usually up until noon, and then they cycle for the rest of the day. When around lunchtime, they start to wind down a little bit, and then restart later on in the afternoon, sometimes increasing the buying pressure, or even the shorting very heavily at the end of the day, like we've seen.
Yeah, the last 30 minutes.
Within the last, when I say at the end of the day, I'm sorry, I didn't mean to cut you off, Elmo. I just wanted to specify. I mean, like in the last 15 minutes of trading.
Yeah.
So I literally mean at the end of the day, you know, right before the fucking trading ends. That's why I always like Power Hour, especially with these manipulated stocks. We finally broke the 500 viewer resistance level. So thank you very much, everybody. Please like, please subscribe if you found any value in this information. I plan to drop these a little more often now that I think it's a little more necessary for people that know what's happening on the stock. It's not trading sideways anymore, in my opinion. Let's just say that much. It's not going to be trading sideways anymore for a little while. Let's put again. So I'm going to keep taking a look into it. So this motherfucker was in. Where'd he go for Halloween? He was traveling on Halloween. He came back to Chicago probably to visit his kids or something. Yeah, right. Wife fucking hates him, so probably not. When did he travel over to LA, man? Where did this fucking sneaky bastard been going to?
Well, that was Halloween. Memory serves me correctly. I believe it was Halloween that he actually did the turn and burn from New York to LA.
Yeah, right. There's no data right now. He left. There's no data available right now. That's pretty interesting.
Mm-hmm.
I just got a tweet from Market Watch. It is a
Throw it up
foregone conclusion. So can you guys hear me now?
Yep.
Yep.
Okay. Tweet just got from Market Watch. It is a foregone conclusion the Fed will announce that a tapering of asset purchases will begin later this month, according to Michael Gapin, chief U.S. economist at Barclays.
We're definitely going to start tapering, in my opinion. The government has no choice but to start tapering, because if they don't, it's going to be even more bearish on the economy, and the economy can't fucking take it right now. Between all the people that have quit their jobs and all the people that were fired due to this ridiculously unconstitutional bullshit vaccine mandate, that's all I can really say about that. It's a sad state of our current economy. Only 58% of Americans between 16 and 65 are actually working. Only 58% of Americans between 16 and 65 are actually working right now. Let that sink in a little bit.
I'm gonna send this to you, but I'm gonna read this real quick because this is fucking crazy. The Fed has indicated the pace of reduction in its bond buying program is likely to be $15 billion per month.
Yes, sir.
This means that the current pace of $120 billion in monthly asset purchases will end completely in the middle of next year. Are you fucking kidding me?
Hey, that's right on track for when they expect inflation to start hitting.
Absolutely, because right below that it says transitory inflation. A lot has been written about Powell's view that inflation, which is transitory, which doesn't mean it will quickly reverse. Instead, it means that within a reasonable timeline, inflation will revert to its 2% target, says Tim Dewey, chief U.S. economist at SGH. Oh my God, I can't talk. SGH Macroeconomics. Fucking crazy, dude. That's a giant fucking snowball. Is what it is.
Absolutely. This the amount of money that the Treasury has is barely enough to get them to December, and they've been fighting about this way too much. I've been watching these discussions every day. They're just arguing more and more every single day, guys. They're not getting any closer to an agreement. And if they vote next week on this infrastructure bill, you heard Pelosi before saying, "Oh, we're gonna have this done this week," and she keeps saying that over and over again. She's full of shit. She's goddamn Wolf of Wall Street, and we're gonna be fucking rich. That's what I fucking think. That's what I fucking think. And I put my money where my mouth is. These are my babies right now, AMC and GameStop. That's why I'm covering them so heavy. I just think I'm just super bullish on them, and I love the stock. I love the companies. Plain and fucking simple. It sucks for our economy, though, sadly. A lot of people think I want the economy to crash. That's not the case. If you saw one of my first videos that I did with Jackson Hunter on his channel, if not, you know that that's the last thing that I want. The whole reason that I started discussing any of this with people is because the information that's coming out of the government very quietly, and all these reports from the Office of Comptroller of the Currency and the Federal Reserve, the liabilities are not looking good. Let's just say that much. You know, they've got an immense amount of liabilities compared to their assets. And it's not something that's sustainable any longer, especially when our stock market is at all-time highs. And how convenient that all these assholes in Congress had to sell off their fucking positions. You know, that's a joke. That's a fucking joke. They were told to sell off individual stocks. Why do you think that happened? So again, be very careful with calls. I want to say that much. They definitely look very profitable, but that doesn't mean that a lot of people, the majority of people, lose a lot of money on calls. They could be a very good tool and a dangerous one. So just do your research on them if you decide to try them. Definitely paper trade if you have not ever tried them. That way there's no risk to you. If you paper trade on your paper trading account, you don't have to worry about losing money, because that's just fake paper money. Again, these are the ETFs holding GameStop. Thanks to Kenna for bringing that up. You know, this ETF volume is going to keep increasing as they try to maintain things under control, but they can only do so much, and a lot of these stocks are going to alternate and take turns running. So fun times ahead, everybody. Fun times ahead. Gonna get that fucking money. Thanks so much to the mods.
Fucking rich,
Pam,
boss.
thank you very much. What's that, Elmo?
I said we're gonna be so fucking rich.
Oh shit, you could say that again. That's what I fucking think.
Gotta be so fucking rich.
There he is.
My guy. These are the ETFs holding AMC. It's an insane number. Insane number of amount of manipulated stocks in here. GameStops. See, people need to realize that these things are traded with and against each other, and that's why sometimes they trade together, sometimes they trade separately. We're in one of these patterns, in my opinion, one of these fractals, the algorithmic fractal in time, in which we are in a very bullish position. And this is where we left off today on the Vortex Indicator. Blue overtaking orange is, again, a very bullish indicator. It means that we're having positive volume, an increase in volume. And when the volume is up, these stocks run. Plain and simple. Same here on the Stochastic RSI, the KDI, and the Stoch. Again, we're crossing over from bearish, oversold territory into positive territory, where the RSI is overtaking, the positive RSI is overtaking the negative pressure. And that's why the blue line is over the orange line, as it is every time we see some green. So, good luck to everybody. It's going to be a fun time. I don't have this pulled up on GME, but I'm not going to take the time to pull it up, because it's the same shit. Same fucking stocks. If you guys keep, I know a lot of people don't agree, but I hate to break it to you, it's the same stock with different ticker, as some people like to say. And that just is what it is. And that's one of the reasons that I think that we're going to be filthy fucking rich. So. Yeah, the Fed's going to trade that shit off. They traded everything. I don't know, VIX calls are looking mighty tempting. Those January VIX calls for me are looking extremely fucking tempting. So I wish you peace and wealth, everybody. Thanks so much for coming out and being with us tonight. Good luck on the market. Fuck. This is great news. Super bullish. Peace and well.
See you all tomorrow.
Holy shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
cowboy, give me the fucking money. Get the goddamn money printer out.
Great. Bounty letter.
Okay.
We're gonna be so fucking rich. Get the goddamn money printer out.